there, Maverick Traders. Rob Reinhold here. It is the Trading Room, and we just got wrapped up with September monthly options exercision. That means on Monday, we will be doing the accounting. On Tuesday, we'll be doing trader payouts. And on Wednesday, we will be doing level advancements. So another month in the books. Let's look forward to October. In this session, we're going to be talking about the news. We had big news this week of Fed meeting, and we also got some all-time highs. As always, we're going to break down all of the sectors from a +3 to a -3, and then we're going to go find some trades in all the sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so the big news of last week was all-time highs. Now, before we jump into that, I want to talk about this. Now, if you've been around Maverick, you've heard this story quite a few times. But if you're fairly new to Maverick, then this might be new to you. I've had a bunch of traders reach out to me lately who are bearish. Some of them have been fighting this market, which has turned into some losses. I want to bring up this old story between myself and Joe Jensen. This was years ago. I mean, this was like probably 24, 25 years ago. We were arguing about the market. And I said, Joe, I know I'm right. And he looked at me and he said, I don't care if I'm right. I just want to make money. Now, at that point, I really thought being right and then making money was the same. And it's really not. I was very interested in being intellectually correct, smarter than the market. I was always trying to do counter-trend stuff, trying to say it was gone too far or it hasn't gone far enough. And Joe was like, no, I just want to be on the right side of the trade. That's all I care about. So, in this market, if you've been fighting this market, put up the red flag or the white flag, you've lost. The market broke out to new all-time highs. It's okay to say you're wrong. And if you're fairly new at trading, you're going to be saying, wow, I was wrong a lot. Your ability to say my premise and all my intellectual ability was wrong and I need to throw it away and move on will dictate whether or not you have a career in the trading business. If you can't do that, you will not have a career in the trading business. You will give your money to the markets, and professionals that don't care, they will take it, who have no bias. So that is your goal as a trader, to have no bias. Your only bias is what is the best place for me to be profitable. That's your bias. So Dow and S&P 500 hit all-time highs. The Qs are still about 4.2% under the highs, so they got a little bit of ways to go. On Wednesday, we got a Fed rate cut, the first rate cut of what is expected to be a lot of rate cuts. The market was expecting this. Some people were looking more towards a 25 basis point cut, but it was a 50 cut. And the Fed came out and signaled that they were going to do more. Now, ironically, off of that move, we had the bond market yields actually went up after the meeting. And I got an email about that, said, Rob, why did this happen? Well, if you take a look at the bond yields, they've been pricing this in for the last 2 months. This is classic buy the rumor, sell the news, or sell the rumor, buy the news. This is simply been priced in. So we've got the Fed is now on a cutting cycle. The market likes it, breaking out to new all-time highs. At this point, going forward, inflation is no longer the most important thing that we need to look for on the economic calendar. For the last 2 years, that's been the biggest story. It's no longer the story. Economic growth is now the story. So let's take a look at this retail sales report. It came out better than expected. This is what we need to continue to see if the market is going to move higher. If we get weaker than expected economic news, it's going to be a little bit of trouble because now people are worried about growth. Let's take a look at the final numbers of the week. So if we take a look at the Dow was up 1.5%, S&P 1.3, Qs 1.4, so right around the same here. The Russell 2000 up 2.5%. Oil, and then gold. Gold is just continually cranking higher to new all-time highs. This is all very bullish. Basically, everything was up for the week. And if we take a look at the chart, we had this long period of resistance that we had come up to, hit it once here, came back up, tested it here, and you can see we got 2 candles here, tested it, and then I want to talk about this day because this is the Fed day. And the Fed came out, cut 50 basis points, the market shot up temporarily. And then it fell, and that's pretty typical on Fed days, but then there was nothing after it. And we actually ended up closing on the low of that day. I remember thinking, ooh, this is not so great. However, the overseas markets really loved the news. The Nikkei was up like 2.5%. The Hang Seng in Hong Kong was up like 3%. So all the overseas markets rallied huge. And then we got the gap up on Thursday, and it held it. And not just held it, but it was a green candle, meaning that even with about a 1.5% gap higher, people were still in there buying. And then we saw Friday's candle. At one point, there was some selling. By the end of the day, people came in and bought. These 2 candles, a lot of times when you break out of a resistance area, sometimes you get these big expanded range candles. And that is not what we got. We got these candles, meaning it's a little tired. It's made a big move here from 5,400. It's just a little tired. I think we're going to be in this little area here for the next couple of days, but I do think we will be creeping higher over the next week or two. So ultimately, remember, your bias is not to stick to being long, stick to being short. Your bias is to be where the charts tell you to be. These charts are telling you to lean bullish. The NASDAQ doesn't look as good. We're going to take a look at technology. This is, not all that great. It's not terrible. Here we are. We're trying to hold above this support level if we can. Then we may move back up to all-time highs. But ultimately, everything here is telling us this market is bullish. And everything here is, again, bullish, 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 bullish. And so the point I really wanted to make on this trading room is that if you are one of those traders that is fighting this move higher and you've been fighting it, look, just say I was wrong. And we have another saying at Maverick, sometimes you got to plug your nose and buy. Look, it stinks. It stinks. It doesn't smell good. It's terrible, but just plug your nose and follow the charts. Follow the technicals. With that being said, we didn't have a breakout and run. We had a breakout and barely hold on. I don't think there's a lot of new money that's going to come rushing into this market. And in fact, when you take a look at where we are for the year, the S&P is up 20% for the year. That's a really solid year. So we've got basically 3 months left in this year. We're already up 20% of the year. You have to look at this and say, okay, we probably have some limited upside from here. As I said, I don't see any downside unless there's some black swan event. But I think you can realistically just say, okay, maybe we're up 28% by the end of the year, 25% by the end of the year. I mean, that's in 3 months going up 5%. I think it's going to be a slow grind higher. And U.S. economic growth is now the focus of this market. That is what matters. Let's take a look at the calendar we have this week. And you can see we have stuff like manufacturing. This number has not been all that important. These numbers are going to start getting more important. They're going to start looking at things like manufacturing, consumer confidence. If these stay strong, the market is likely going to move higher. Durable goods orders. This is going to be a big one as well. Usually it's pretty much ignored. We're really looking to these growth numbers now for a key to where this market's going. We've been talking about this core PCE price index for like 2 years and talking about how important it is. Guess what? It's no longer that important. It is not important at all. Even if it comes out at plus 0.3, no one's going to care. Inflation is not the concern right now. Growth is the concern. So where are we on our score? I'm still at a +2. Even though we broke out to all-time highs, it's kind of weird to think we're breaking out to all-time highs and we're not at a +3. If someone said, Rob, I'm going to score the slope of this 50-day moving average higher, I would not have anything against it. That's perfectly fine. If you want to say we're at a +3, great. If you want to say you're +2, that's where I am. It doesn't matter. It doesn't matter as long as you're leaning to the bull side. Let's go in and take a look at those sectors and see the movement. We only had one sector this week that did not change score, and that was the utility sector. Utility sector was +3, and you can see it did great. It did great, a little bit better than the market. What didn't do great, real estate and healthcare. These were defensive sectors that were doing really well when the market went down in July, and they also did really well when the market went up in August and September. However, over the past 2 weeks, we've started to see that the cyclical sectors, the things that grow when an economy grows, they're doing really nicely here. So I think there's a little bit of leadership change with some of the cyclical stuff. And then real estate and healthcare are likely going to underperform a little bit here going forward. Let's go through each chart here and score it. Very clear here. This has been a +3 for a long time, and it continues to crank. This big candle, pretty cool story. If any of you hadn't heard of it, Constellation Energy Group, CEG is their ticker symbol, had a huge jump, and the whole sector had a huge jump. Microsoft has entered into an agreement with CEG to reopen the 3 Mile Island nuclear plant in New York. And I just fact-checked myself. It's in Pennsylvania, apparently. But it's really cool because they're going to reopen this power plant and solely give it to Microsoft or provide power for Microsoft's AI services. Just a really big deal. And all of a sudden now, utilities are now being seen as a growth sector where they've never really been seen as a growth sector. So look, everything's working already in the sector. This thing stays at a +3. No question about it. Next up is communication services. Went from a +1 to a +2. Okay, we're above the moving averages. The moving averages are still flat. So again, this is moderately bullish here on communication services. Healthcare was at a +3. We've backed down to a +2. This could still be a pullback. But there's just so many other better sectors out there that I think we want to just downgrade this one here to a +2. Healthcare didn't really go anywhere this week, and in fact was down, telling you that people were selling this sector this week and buying other sectors. We're going to move this from a +2 down to a +1. Industrials was one of the sectors that people wanted to buy this week. Goes from a +2 to a +3. Very strong move in industrials. In financials, we were at a +1. Had a nice move up, going to a +2. If we can break out of that resistance, probably we'll join everything else at a +3 next week. Consumer was doing great. We talked about this nice breakout of this little base here. It is continuing to move higher, so we're going from a +2 to a +3 on consumer. And let's take a look at tech, because tech is the one I think, gets so much focus. And yet, you take a look at this chart, it's not great. It's not terrible, but it's not great. Compared to, utilities and industrials, it just does not look great. That being said, it is a +1, so moderately or minorly bullish. But tech is not really where you want to be right now on the long side in the market. Materials continues to get more buying, +3 on this one. And then energy had a really nice bounce last week. This was a very significant bounce in energy. Well, you can see it's taken us right into our moving averages and just holding out there. So between moving averages, that's a 0. This is where we were last week. So we had everything basically moved up except for 2 sectors moved down. So we had real estate move down to a +2, and consumer materials and industrials joined utilities at a +3. Comm services and financials moved up to a +2. Healthcare moved down to a +1. Technology gets a little bump up, and then energy gets all the way up to a 0. So this is where we are. There's no doubt that the cyclical parts of the market are working best. Consumer, materials, industrials. Again, utilities is not considered one of those, but it's participating in it along with financials. As you can see, energy and healthcare probably are going to be the weakest here going forward. Let's take a look at our trade slots. We had a ton of trades drop off, just a ton of trades drop off with the monthly options exercision. So we only have 4 trades on at this moment. We are at a +2. Again, if you wanted to be at a +3, understandable, but here's our allocation of the trades that we can have with a +2 analysis of the market. So this week, I'm going to be adding a +1 to utilities and comm services. You may ask the question, why didn't you go to a +3 on utilities? Well, look, I think there's going to be some better places. I'm not really looking to get heavily bullish here. As you can see, I'm looking to get moderately bullish. And then if we get some more follow through, I will absolutely be looking to add on some +3s. In healthcare, I'm looking to do a neutral trade, and also in technology. So these here are the weakest of the sectors, other than energy, where I'm also going to be doing a -1 trade. And the materials, we're going to add in a +2 trade. So as you can see here, adding on a little bit of bullishness onto our already existing bullishness, that's what we're looking to do this week. All right, let's take a look at that first one in utilities. This is PCG. This is Pacific Gas and Electric. You can see it's been strong along with everything else. Had a nice run up here, had a pullback. And again, sometimes you get what we call the W on these pullbacks. But they don't go yet. They have a double pullback here. This one looks good. Obviously up to $20.70 is going to be resistance. Remember, we're looking to be a +1 on this. So we're not asking this thing to break out and run to new all-time highs. I'm looking at this saying, hey, you know what? How about you go up to 2050? So I'm looking at the 1950, 2050 bull call spread. As you can see here, that's not asking it to go up all that much. If it goes up and stays in this upper range, it's going to be a nice trade. If not, it is a clearly loss defined risk trade with a bull call spread. If you wanted to be a little bit more bullish, okay, maybe the 2021 would work. All right, moving on next to our trade in comm services. This is also going to be a +1. I talked about this one on Thursday. Just a clear breakout of about a 2 or 3 month base here in Meta. Now look, I don't like Facebook. I don't really love the product. I don't like anything about it. But look, that is my own personal bias. I used to use those personal biases to get into my trading. So if there's a company I liked, I only went long. I never went short. If there's a company that had slighted me in any way over the years, I only went short and I never went long. I was able to disconnect my opinions from my trading, and this is just a great looking trade. Great looking breakout, happened on good volume. There's no reason why this one shouldn't just drift a little bit higher here. And I'm looking to be a +1, so I'm not even asking it to move all that far. I'm looking at a 550, 560 bull call spread going out 2 weeks. That's basically right where it is. So as long as it holds above this 560, it's going to be a decent little profit there on this one. I'm not asking it to go very far. If you do want to get a little bit more aggressive, okay, go out to the 560, 570. That would be more of a +2 trade on this. I'm looking for a +1 trade. Right, next we're jumping over to technology, where we're going to be doing a 0. Here is Hewlett-Packard's. And this one is pretty dang sideways. What we really like to see is both of these moving averages flattening out. If anything, it's got a very slight downward bias here. Looking at where our target is here, remember on a butterfly, we got to pick where we think it's going to be on the date. Now, I don't have many trades rolling off this next week, so I'm looking to be doing a 1 week trade on this one, the September 27th. And because I'm looking just 1 week out, then I'm going to be really focused on where's it likely to be September 27th. I think this week is going to be slightly higher. So that tells me I think this stock is likely going to be slightly higher. The next strike here that I can pick is 35. So I'm going to go with the 33, 35, 37. So basically this is going to be my butterfly. I want it to be right in this area. So this one's actually slightly bullish. However, if I was going out one more week, I do think this one has a downward slope to it. So on that one, I'd be looking at doing the 32, 34, 36. Again, you're always looking at where you think it's going to be at that date of expiration. That's how you make your call. All right, let's switch over to materials. This is going to be our most bullish trade here, and this is on DuPont. I wanted to, if you want to pull up a longer term chart, this DuPont is basically just high basing from a very big run it had back here. So big run, and then we've got this big long high base. We haven't broken out yet. So that's why I'm going to give it some time. Whenever I see a trade that hasn't broken out yet, but I want to be in it for the breakout, I just add on a little bit of time to really give myself the best chance of being profitable on this. So I'm looking to go out of the October 11th to the 83.86 bull call spread. So we're looking to basically say, we think we're going to get up to 86. That's where we think it's going to be by that week in October. And last in energy, this is going to be our only bearish trade. And I wanted to find something that had a really nice bear rally and that already kind of failed. So anything that had green candles on Thursday and Friday, I basically ignored. I want to find something that had actually failed to rally. You can see here, this is Apache APA. We had a nice bear rally from 22 up to 26. That is roughly an 18% rally. There's lots of meat on the bone for this one. So the big question is, how aggressively do you want to play it? I've already predetermined I'm not going to play it very aggressively. So I'm looking at a very moderate bear put spread, looking at the 26.50, 25. So basically, it needs to close below 25. That's where it needs to be on that October 4th period. All right, those are the trades I have for you. If you have some trades you want to share with the group, log on to the members area, go into the forum, and let's get some chatter going. Wrapping this up, the markets are bullish. Look, you may not feel bullish. You may not feel like things are going the right way. It's really funny. I see all these things online about people talking about, oh, the economy's terrible right now. And I'm thinking, what? Am I just living in a bubble? The economy's pretty good. And not just that, but if you take a look at all the actual numbers of the economy, and you don't have your opinion at all, take a look at the actual numbers. This economy is doing okay. It's not a great economy. It's not a bad economy. It's an okay economy. But I constantly hear people on TV saying how bad the economy is. And look, I know there's little pockets, and I know everyone's situation is different. But when I look at the numbers, I don't see it. So I get that we're all in our own little world and our own little bubbles with our own little biases. And I totally get how you may not feel bullish. And guess what? I'll agree with you. But that doesn't matter in trading. You need to follow the charts. So if you don't feel like getting bullish, you feel like this economy stinks, plug your nose. Plug your nose and get over your ego and go make some money. Because if you've been on the short side, you've only been giving money out to traders who are willing to be long. Always check your sector analysis. Make sure you're overweight in the best sectors and underweight in the worst sectors. And of course, as always, manage your risk. Everyone have a great weekend. Goodbye, everyone.